Hi guys, thanks for tuning in to another episode of Nuggets News. Well, what a week it's been. It's an absolute sea of green in the altcoin space. Power Ledger was up over 300% at one point today as investors in the macro world and the crypto world looking towards that green renewable theme that everyone is talking about. So we're going to talk about all the big news items there, go over the macro stuff, tie it all in together. I just want to start off by saying welcome to 50 new members this week in our crypto community. If you are new, you can head over to this unit tabs, look at all the rules and posting information, that introduction, member only discounts, the FAQs, the investing education, trading education, and under the fundamentals you'll find my portfolio and that walkthrough of how I think about all the different coins. So this is all going to be wrapped into a portal and an app in our new website that we are launching, so stay tuned for that because I know not all of you do like Facebook. We've also got those monthly member live streams, so get your questions in early if you want a more detailed answer on a project or some sort of education, and we will be doing those for members as well. For trading, FTX are supporting the channel. They've come out with another great index this week, the Privacy Coin Index. Last week I spoke about the Exchange Coin Index, so we're going to have a look at that one as well at the end. But this is where I do prefer to do all my crypto trading. They've now got Aussie dollar deposits and withdrawals for you to take profit there. So you can not KYC if you like to remain anonymous, but if you do want to link your bank account, you do have to register as you do with all exchanges there to pass the KYC. Final bit of housekeeping here. Yesterday, YouTube took down one of our live streams. At the moment, there's a lot of scams going around. You've probably seen those live streams flash up. YouTube actually were really quick about this and reinstated that video within a few hours. But if that ever happens again, all our content is available on Library, which is a decentralized version of YouTube, and we should be supporting those decentralized platforms anyway. So let's get into the local Australian news, where we're seeing that more and more of these older homeowners that have paid down smaller mortgages are far better off than younger people these days. Now, everyone's talking about real estate prices are set to skyrocket in Melbourne and Sydney this year like it's a great thing, but remember, it's pricing people out of the market that don't already have a property. So Sydney-siders mortgage debt is 30% higher than the national average. It's saying here that the average Sydney mortgage is now only $365,000. So look, again, I'm not sure how much that figure is skewed by the older generation versus the younger generation. You know, most people I know in their 20s or 30s have got mortgages far bigger than this in Sydney. So let me know what you think of those figures below. But because of these enormous debt loads, whether it's household debt, mortgage debt, credit cards, or autos, this is why interest rates have to stay lower for longer. And the RBA are warning about these risks. And I think Philip Lowe knows that he doesn't necessarily want to go down this path about trying to stimulate the economy by getting Australians into more debt. He's one of the few central bankers I think that's got his gut feel and the way he talks. I think he knows that something is really wrong in the world economy and what we're doing isn't the right way out. The final piece of local news here is that Sydney is just one of the places that is waiting on a lot of uni students that are stuck in China because of the coronavirus. So this is going to hit our economy. Education is one of the key drivers, whether it's down here in Tasmania or any of the big universities around Australia. We've got heaps of overseas students. So this is something that's definitely hurting our economy, let alone all the exports and the other things which we're going to get into here. So the latest figures have jumped again today. We'll just hit the refresh button here. But basically this is going up by about 10% a day, and we're getting to that point of the curve where if it keeps going at that rate, it's going to get pretty nasty pretty quickly. So we've now got China admitting that more than 500,000 people could have had close contact with the infected people. And the scary thing here is they're saying that there's been cases where they think it could actually be a 24-day window where you may be contagious versus that 14-day window. So putting my pharmacist hat on again, I did do a deep dive into this a couple of weeks ago. If you haven't seen that already, I recommend you watch that video about my thoughts on the coronavirus. But I've had all messages from people talking about the different conspiracies that are going around, so I try and keep things factual on the channel. This is one piece of information that's been going around talking about the rising levels of sulfur dioxide, and for those of you that know your biochemistry, you know that this comes from burning of organic matter, and we do see big spikes above Wuhan there. So our theory is going around that this is them trying to burn the bodies or whatnot. We just don't know yet. There's a blanket of secrecy around what is happening in China, but in the coming days we are going to have a really good idea of how bad this is and how much those number of cases does jump. So the Center for Disease Control in the US is warning that this can become widespread throughout the United States. I think we had the first death in Europe this morning. So it is something that I think world stock markets are really shrugging off. And we've seen how quickly things can just drop off a cliff. So Dan Tapia here, macro investor, he's talking about what happened in Hong Kong. We saw the riots there and civil unrest, and just look at this drop off a cliff of average daily visitors. So China, tourism, Australia, down here in Tasmania, my friends that own businesses tell me that the buses of Chinese people over our summer have really dried up. So one by one, it is going to affect all the different people, casual staff getting less hours, part-timers. They're the sort of things we're hearing. But what is the central bank response to this? Like always, it's let's print some money, maybe cut interest rates. But interest rates have been cut 800 times, and investors are just throwing money at anything. This is now Bank of America saying that this is just getting stupid. Fundamentals have gone out the window. Powell came out this week. He was in front of Congress, chairman of the Federal Reserve, saying that the Fed lacks ammo to combat the next recession, and they're going to have to do huge QE because they can't really cut interest rates, and that's looking like it hasn't worked that well in Europe. So absolutely remarkable here, the entire treasury curve. So those of you that understand how bonds work, we've got short-term bonds all the way out to the 10 years, then 30-year bonds, but we have the entire yield curve is now below inflation. So this is this upside down world where we live in, where nothing is playing by the rules anymore. Investors know that the Fed are just going to pump money in whenever things get bad. So here you can see this enormous increase in the repos. The repo market did quiet down for a few weeks. Now all of a sudden it's increasing again, and there's that lack of liquidity. But the Fed is saying that they're actually going to cut back. They're going to start printing less money or doing less of these repos each day. That's not good. And I'd almost guarantee you that if they actually hold true to that promise of cutting back the money printing, that stocks are going to fall, because we know that's the only driver at the moment. Some more really cool charts here from Real Investment Advice. They're just talking about the debt and the huge deficits that the US is running now and the path to modern monetary theory. So just in a nutshell, modern monetary theory is basically saying governments are just going to start printing as much as they want. They don't even care about these deficits anymore, and asking the Fed to buy more bonds off them or whatnot. They're just going to cut out that whole step, and governments are just going to print like crazy. So once again, the upside down world we're living in. Investors have got low cash balances. Another thing, just raising red flags here, because they've got all their money at work. They're leveraged up. We see stats like this, the put to call ratio. So this is telling us about the number of people that are betting that the market is going to go up versus the number of people that are thinking the market's going to go down. And options traders are just showing no fear. So I have done options education in that learning section in our Facebook group there, but everyone is just betting the market's going to go up. Not only that, they're not buying the protection, the insurance in case markets go down. So at these record readings, really scary stuff, how investors have just thrown caution to the wind. So what we see here is, with interest rates and yields on bonds so low at the moment, this makes Bitcoin and gold more attractive. So I think gold's actually setting up for a really big week. If you want to trade that with eToro or the GDX, the gold basket, I think technically that looks like it could be breaking out in the coming week. But a lot of money going into bonds and Bitcoin and bullion, as it says here, gold bullion, as quantitative easing, bit of a mouthful there, sends stocks soaring. So all this is talking about is the theme that I just discussed. Investors and stocks are at record highs, not because they care about the coronavirus, because they think that central banks are going to print money to try and fix things. And that's not going to go to that casual that has their hours cut back. It's going to go into the stock market and make the rich richer. So legendary investor Charlie Munger slamming companies who are using these new accounting methods to adjust their earnings, and we always get these magical numbers that we just beat the expectations and we buy all these shares back. As you can see here, buybacks are tracking 27% above last year's levels when we saw record stock buybacks. So absolutely insane what is happening on Wall Street just to try and blow this bubble bigger. And now that investors have run out of cash and capital, and even the banks have run out of money, we see the repo market injections having to put money into banks. Where else can we get money from to blow this bubble bigger? So the White House is now considering tax incentives to push more Americans into the stock market. This is absolutely insane. I had someone message me this week saying they're starting to get these ads from Australian banks offering you loans at 6.3% interest rate to invest in stocks. Now, I know some investors are saying, oh, this is pretty normal. You can borrow on margin and whatnot. But my point is, at any stage, if stocks don't continue to go up at 6.3%, that you're losing money. You're behind the eight ball, and there's no guarantees at all that stocks are going to go up that much. What if they have a couple of down years? What if you borrow more than you can actually afford? That's the number one rule of investing. This applies to crypto as well. You never invest more than you can afford to lose. And going into debt and borrowing a loan, that is more than you can afford to lose. So I just think this is nuts. You guys let me know what you think. But as we said before, Bank of America now coming out and saying that we're witnessing the biggest asset bubble ever created, and it's all done by the central banks here. So I guess tying that all together, it has never been more important to educate yourself, protect your wealth, or at least know how to. For those of you that do manage your own self-managed super, your retirement fund, we've got that deal with New Brighton Capital. You get that free consultation if you find out whether or not a self-managed super fund is for you. You can get your Bitcoin in there, your gold in there, your defensive assets if that's the way you want to go about it. But they'll let you know in that free consultation. For those of you that are interested in trading the stock markets, that eToro app, we've got that deal running for a couple more weeks where you do get the $100 Bitcoin. I believe the eToro side of things, the 10% deposit may have ended there, but we're still giving away the $100 free Bitcoin for those of you that sign up that are interested in trading gold, the gold miners, bonds, oil this week. When things like the coronavirus hit and oil price goes down, these are the sort of things where they've got the practice account. You can practice that style of trading because these are lifelong skills for when these sort of events come, knowing how to protect yourself and even shorting the stock market once that bubble eventually pops. All right, so the final thing I want to mention about eToro again here was in the news that they are using real crypto in a number of other countries rather than these CFDs. So that it's not the platform at all that I prefer for crypto trading. As you guys know, I do all my crypto trading on FTX. I've been trying to do a bit of day trading there on eToro, but you do get eaten up a little bit with the spreads. So I know that a few of you are copying my portfolio, and I haven't had the greatest month this month because you do get eaten up on those spreads. So I am going to make that more of a long-term focus now that we know we're in a bull market with our cryptos as well there. But those of you that are in Australia, once eToro get that tick of approval, that's when they're going to start offering the real crypto. And as I said here, 90% of their investors in other countries are loving the fact they can buy real Bitcoin through this app and then withdraw it to their own wallets and whatnot. So very cool stuff there. Alrighty, so as I mentioned at the start, there's been a lot of scams on YouTube at the moment. Keep an eye out for those, but we've also seen OneCoin and these Ponzi schemes. They always pop up in every bull market. And we've now got a TV drama, and they're actually using it to promote OneCoin. So for those of you that don't know, this was a huge scam that went around for years. We've got Plus Token, the other scam that collapsed recently. Their funds are on the move again. So this was a little bit of a scare for investors. We know they own large amounts of Bitcoin, Ethereum, and EOS. If they do get sent to exchanges and whatnot, that can cause a little bit of a dump. We're going to get to that price action at the end there. I wasn't sure where to put this news about Craig Wright, so I'll put it in between the scams and the Australian crypto news. But Craig Wright has come out and said that Bitcoin and Bitcoin Cash are using his database without his permission. So this is interesting to me, more so because he was the one that created, or one of the co-creators of Bitcoin Cash at the time. So he promised us the keys, the bonded courier. That never happened. There's excuses and whatnot. So once again, it looks like he's changed his narrative here and giving everyone something to fear. That seems to be the way that he's going about things these days. All right, either way, the ASX in Australia are beginning their blockchain upgrade. That testing starts in July. So pretty cool stuff. We saw the blockchain roadmap from the Australian government last week. An Australian soccer team, this was Perth Glory, that have been purchased by a group of crypto lovers, and they're planning on raising $70 million here. So sounds like it is going to be a bit of a possibly a security token. I'll keep you up to date on that. But Australian fans, Perth fans, what do you think about Perth Glory soccer team becoming tokenized? Over to Germany, where we have got tokenized securities on the Stellar blockchain. They've really opened up there. We've seen 40 banks get the permission to hold custody of Bitcoin and other cryptos for German citizens there. We've got BitGo, one of the largest providers of custody in the crypto space, are launching 2 new custodians over there in Europe. We've got Litecoin, who purchased the WEG bank a couple of years ago, and I think that one's been forgotten about a little bit. So not only do Litecoin now own a stake in a German bank, they're actually letting Litecoin holders earn interest on this partnership with Cred. So this is a theme we're going to see continue to play out, where exchanges are becoming banks, and they're going to acquire these other licenses, and they're becoming behemoths, not just little old crypto exchanges anymore. Plenty of options for you to earn interest these days. JP Morgan considers merging with Consensus. So this is Consensus that's heavily involved with Ethereum. A few years ago, there was this talk that all these big boys that are experimenting with blockchain and private forks of Ethereum, they're never going to use the public blockchain. And that is something that's really changed in the past 12 months. We see Microsoft, Ernst & Young, JP Morgan, they're now focused on the public Ethereum blockchain and Bitcoin blockchain as well, and others. But that's really cool to see. That was something that everyone said would never happen, and it is happening, playing out in real time. Cardano, after a $500,000 donation to University of Wyoming, they are opening up a research lab there. So all this blockchain stuff is starting to get roots in the real world, which is very cool. Now, all this traction is starting to scare those in power. So the IMF have come out and said that, the rapid growth of crypto is scaring us. We're putting out these warnings. We've seen that the US is fearful of losing the global dominance, and that's what this really all comes down to. Any of you that know the history of money and understand it, that is why the powers that be are fearful of crypto. But at the end of the day, you can't stop software, you can't stop math. But they are going to crack down where they can, and they're going to tell you that crypto is used for all these bad things. So Trump has got a large chunk of his new budget set aside for the Secret Service to investigate crypto crimes. Secretary Mnuchin has come out and said that we're preparing significant crypto rules. So once again, these are scare tactics. Surprisingly, Fed chairman came out and actually was pretty supportive of privacy and people's rights to privacy, whether it's their central bank digital currency that gets adopted or just digital payments in general. So that was an interesting take from Jerome Powell, who I actually used to really like until he did the backflip and just became another money printer and a slave to the stock market and the banks, like all other Federal Reserve chairmen of the past. The Department of Justice this week did reference the mixing of Bitcoins to get your privacy as a crime, and they have arrested a software developer. This company was a sponsor of some of the big crypto podcasts in the space. So either way, we know that this is where the bad guys go to mix their coins. So that's the way that regulators are viewing it at the moment. But I believe that everyone does actually have a right to privacy, and there's a number of mixing services out there. I've done tutorials on some of them on Ethereum, like Tornado Cash, for example. Privacy is everywhere these days. Zcash are using the zero knowledge proof, the ZK Snark technology. Their foundation plans to help scale the Tor network. So the Tor network is the browser where you can use the dark web, or you can just browse the normal internet without Google and everyone surveilling everything you do. We've now got the same technology being used by Aztec. So that ZK, that privacy technology, allowing what we call ZK DAI. So you've probably heard of the DAI stablecoin. ZK DAI, the same thing, using ZK Snark technology on Ethereum. Really cool stuff for payments there. Now, into some more cool news about gaming. The IRS have removed crypto tax reporting for Fortnite and all these other in-game tokens. So this is hopefully a step in the right direction for the entire crypto gaming space. This week we've seen over $1 million spent on virtual land. So the main beneficiary of all this was Decentraland and their token Mana. A few other little ones I won't mention today, but I am going to do a bit of a special, and I've got a big announcement coming out about a few of these cool investing themes that people want. People are loving DeFi. They don't know where to invest. They're loving gaming. So if you're a member of our Facebook group, you know my favorite projects. For the broader public, stay tuned. We've got some more cool announcements for you there. Another gaming project that had a massive move this week was Wax. So we were really lucky. Thanks to everyone that is in my network that does send me little tips and whatnot. And we did get this before anyone else, that Wax were partnering with Disney. A few of our members were able to buy those Wax tokens on different exchanges or CoinSpot in Australia. And this one doubled overnight. So I know a couple of you doubled your money there with Wax partnering with Disney. So congratulations. Another project that was at the top of that list of weekly movers was Hashgraph. Now, they had a huge jump in price. This one has been beaten down. We got the news that Google was joining their advisory network. They did say that they weren't going to be involved in much more of a capacity, or it's not a partnership working on the blockchain technology per se. So this one gave a lot of those gains back, but a lot of excitement there for the Hashgraph community, who haven't had much to cheer about since that token launched. Speaking of privacy again, I recommend you all use the Brave browser. Google have, it's come out and been revealed by Brave that they've uncovered this mass surveillance of UK citizens. There was a case this week in the UK where Google are handing over information about citizens that are using the browser. Look, 99% of people are completely unaware they're handing over all this information about themselves. So use the Brave browser. It blocks ads. If you're watching this video and you don't like the ads that are popping up, it blocks all that stuff for you as well. So I can't recommend it highly enough. In terms of social media, we've seen Tron buy up Steemit. So Steemit will be transitioning over to the Tron blockchain there. The EOS Block 1 voice platform is in beta, and I have had a little look at that this week. So look, are either of these going to be Facebook killers? I'm not sure just yet, but it is really exciting to see all these developments coming and products launching. And this was something we spoke about during the bear market. This was what was going to drag us out of that bear market crypto winter, with projects launching real apps for people to use, and now we do need the number of active users to grow. Everyone is coming out and trying to jump on the DeFi bandwagon. It reminds me of the ICO hype and then the IEO hype. Now we've got DeFi as this hot word. So Tron have come out and said that they're going to be doing DeFi. Justin Sutton actually followed me on Twitter this week, and I asked him if he wants to come on for an interview. So I'm going to ask him some pretty honest, hard-hitting questions. Let's see what he says to those. Ethereum Classic also jumping on the DeFi bandwagon this week, a partnership with Phantom there. We've got MetaMask reaching 1 million users, and I think the point here is most of you know Ethereum has that huge lead in terms of DeFi apps, users, and MetaMask is the little extension that you can install which just embeds a little Ethereum wallet into your browser, and then you can interact with all these other apps without having to send tokens from an exchange or whatnot. So very easy to use. I recommend you check out MetaMask if you haven't already. You will need MetaMask to buy my top pick for the year, which I did the tutorial on for members as well. Okay, so Kyber have announced $10 million in trading. This is far quicker than expected for them. This was one that, again, we spoke about as being underrated in the DeFi space. It's had a big run up in price lately. Fantastic to see. Coinbase Commerce have integrated DAI payments for all their merchants. This is really good news for Maker and that ecosystem in general there. Not all good news for the DeFi space. So this morning we woke up to news that someone had made $350,000 in very, very short time. And this is how it happened. So basically, they took out a crypto loan, a flash loan from Aave, from the Lend project there. With that Ethereum, they're able to then deposit that into Compound and get wrapped Bitcoin, which is just Bitcoin in an Ethereum version, so it can interact with Ethereum smart contracts. They then send that to Uniswap, the exchange, they sell it, they drop the price on Kyber drops as well, and now they're able to basically execute arbitrage or create this short position, and then they're able to short that wrapped Bitcoin, pay back their loan. This is pretty technical stuff. You don't have to understand how it works other than there are still bugs, or not bugs, this is still exploits in the DeFi world because there's not always a lot of liquidity on all these different trading pairs. People are able to push prices around. We're still tinkering with the oracles, the price feeds of where this all comes from. So we saw a similar thing happen with synthetics earlier this year. The fact is, we're just early on. We need to iron out these bugs. Things are going to happen. Ethereum is trying to move fast and break things. But I do wish all the best to the team. And this probably highlights the importance of these newer projects projects which are offering insurance. So there is one called Open Protocol, and that's using options like we spoke about at the start of the video, where you can use those options to protect yourself from downside moves and make bets. There's another one, Nexus Mutual, we did an interview on a few weeks ago as well, that are also offering insurance. This is going to be a bit of a landmark case. This is the first time anything like this has happened, and some of the insurance projects are actually involved. So I'm really excited to see how this plays out. The other bad news this week was the IOTA Foundation having to suspend their network, shut it down. This is a project that is still quite centralized because of the coordinator node. If you follow the channel, you'll know my thoughts on this. I hope they catch these funds. I hope they fix the problem. I know that everyone is like ripping on these communities when things like this happen, but the fact is, something like the Lightning Network at the moment, this has been increasingly centralized. We see these big hubs where we have to route payments through, and this is not that different to something like IOTA at this stage. So I just hate it when we have all this tribalism and people picking on each other. The fact is, this technology is still so early on, and we're still trying to solve a lot of these problems. And whether it's IOTA or the Lightning Network, I think they're going to be fine in the coming years. We also had a flash crash on XRP. BitMEX have added XRP USD pair. As I said, I don't recommend trading there. Stick to FTX. They've got all the top coins with more liquidity. XRP now available to 2 million new users of the Bread app. So this is another very easy to use mobile app. Really cool to see these partnerships gaining worldwide attention. The more people we get into crypto, the better. We've got a lot of bullish sentiment at the moment. So $1 billion has gone long or bet that Bitcoin's going to go up, and $250,000 on Ethereum. So once again, this is using options. I do have that tutorial coming on how to use options on FTX. But basically, this is where you can bet on price going to certain levels in the future, like buying a lotto ticket, or we have odds of things happening, and you can bet people that something is or isn't going to happen. That's how options work. As I said before, you can head over to that member portal and go down to options education if you want a full explanation there. Wrapping it up, the last couple of pieces of news. Polychain Capital are targeting another $200 million raise for another venture fund. So much money. He's loving the crypto space at the moment. Grayscale, who hold over 1% of all Bitcoins out there, have just put out this report about Ethereum and possibly being a good store of value, which is mind blown a lot of the Bitcoin maximalists. We're seeing people pay huge premiums, 287%. They're paying, instead of paying $300 for Ethereum, they're paying closer to $600, $700, $800, which is absolutely nuts, just to get their hands in an Ethereum fund, because that's the only way that you can do it currently on the stock market. So I know these guys are a bit fussy. They don't want to sign up to a crypto exchange. I think I would be, rather than overpaying that much. But that just shows you the demand that has been there for Ether and some of these other large cap projects this week. And I did tell you guys that the Grayscale fund, the altcoins on offer, they're not dead. It is going to bounce back, and it's been great to see that this week. So Bitcoin's tweet dominance did drop off sharply, so less people are tweeting about Bitcoin. No real surprise there. One of the reasons we've seen altcoins run up. This was a great piece of data from the TIE, one of the websites I use for all my on-chain data. We've also got a website called Sentiment, which has given us awesome insights. This is one that confirms the bull market. So what this shows is the ratio of people that are basically at a profit versus loss. And each time we tick over this 0% mark, more people are positive and euphoric. They're in profit. And as the number goes higher, everyone is making more money. And that's what creates positive sentiment. So whenever this has happened in the past, you can see it's led to a big run up in price in the green. And we've just ticked over there again. So tying it all together, I did a deep dive for everyone on YouTube about my sort of broader outlook. But I think we are definitely in that bull market, and dips are for buying on large timeframes. This is the exchange index. I spoke about this one last week, a basket of all the exchange tokens. So you can trade this on FTX. That's up 50% this week. They did add that privacy coin index, another option for you to trade. Heading over to look at Bitcoin though, we had a bit of a dump this morning. Look, it did kiss this level. We've had 1, 2, 3, 4 wicks get bought up there. as long as we hold above 9,600, where we had that weekly close, a really important level. That is I think what I'm looking at. And oh, sorry, I've already got those lines on there. Let's just remove that. We knew that this was going to be a bit of a cluster of resistance, a huge run on the weekly time frame. I actually think that we shouldn't be viewing this. Let's have a look at the 3-day chart that shows this really nicely. A lot of people expecting a deep pullback, but I think it would be a gift to buy Bitcoin back here in the low 8,000s. When we have these run-ups here and these little consolidations and everyone's expecting a sell-off, this is what I'm expecting here. I'd love us just to chop around before bursting through this longer-term resistance from all the way back at 20,000, the 14,000 peak. This is where I think we are going to run into some resistance, and we're going to need some momentum to break through there. So when you look at these charts, the 3-day chart of ETH and whatnot, yes, we have gone parabolic, but that doesn't mean we're just going to have a big 40% pullback. I think everyone would love to buy ETH back under $200, for example, here. But when these markets get going and the parabolas start, these things can run further than we expect. So yes, we've had that Craig Wright news. We've had the DeFi bug. Does that mean that markets are just going to panic and sell off? No, I don't think so. As I spoke about at the start of the video, we've got huge numbers of people entering this space, buying crypto. I talked to the exchanges, the brokers. We're seeing this new retail interest come into this space. So guys, for more information on anything we do, head over to nuggetsnews.com.au. I hope you have liked this video. Please smash that like button, subscribe if you haven't already, share this video around, and I'll talk to you again soon. Cheers.